Americans seem to be farther away from owning a home. More than 20% of men and 12% of women under the age of 35 are now living with mom and dad to save for a down payment. While the average homeownership rate overall in the U.S. has risen to 66%, for those under 35, the rate is down to 38%. And everyone is facing higher prices, jumping up in major U.S. cities for the 9th straight month, now at an all-time high. But mortgage rates have finally fallen below 7%, with the 30-year fixed now at 6.6%. Will this change things? Joining me now to tell us where housing goes from here, Realtor.com chief economist Danielle Hale. Danielle, thank you so much for being here.
Thanks for having me.
Where are we in the housing market? Because 2023 was all about these supply issues. You had folks that didn't want to put their home on the market because they weren't going to get the price they wanted. And then you had those younger buyers that couldn't afford the higher mortgage rate that was being asked. Where are we now?
So some of those themes from 2023 are going to continue into 2024. The reason that we don't have enough homes on the market is in part because high rates are causing existing homeowners to sit on the sidelines and keep the rate that they have right now, which is much lower than what they can get on the market. But another reason is that we haven't had enough construction over the last decade. We've seen more households formed than homes that have been built. And that's one of the reasons why it's hard to find a home to buy and why a lot of young adults are choosing to live with their parents instead of striking out on their own to rent or to buy a home. So it's a really challenging time in the housing market. Some of that challenge is going to continue into 2024, but there are some reasons for optimism. As you noted, mortgage rates are down to 6.6%. That's going to help make it easier for households to get into the market and help alleviate some of the lock-in effect for some homeowners. And also, we're seeing construction remain at the higher end of the range that it's been at recently. That's going to help fill in that gap, but it's not going to be a quick process. That gap was a decade in the making, and so it's going to take some time to close it and really improve the level of availability of housing in the U.S.
Well, that gap is only going to shrink if those that are putting their homes on the market get more realistic about the price. And one thing we seem to have at this point is pent-up demand from 2023. You had a market that was basically stuck, and now Americans, many that are either selling or buying, they seem to be losing patience. And I would think that this spring selling season is actually going to reflect that, especially in markets where we've seen substantial price drops, like your Phoenix, like your Las Vegas, even parts of Florida.
Yeah, and even Southern California as well. When we look at our forecast for 2024, we're expecting the top markets for real estate activity are going to be in affordable pockets of the Northeast and the Midwest, markets like Toledo and Rochester, and also in the Southern California region, areas like San Diego, Los Angeles, Riverside, Oxnard, areas where both home sales and prices were hit really hard in 2022 and 2023 as mortgage rates rose. We're going to start to see a bounce back in activity there. And at the same time, affordability continues to be an important component that people are looking for in the housing market. And so that's going to keep those affordable areas also at the top of our list.
Do you think that we could get to, by, say, the month of June, mortgage rates somewhere between 4% and 5%? I realize that's a little optimistic, but there have been some experts that have predicted that's where we're going to go.
So that's not our expectation. I think we're still going to see the Fed funds rate up above 5% as we move to the middle of the year. And so I think it's hard to see mortgage rates fall that quickly. That said, I will say they've come down faster than we originally expected so far. So it's possible, but it's not my base case expectation. My base case expectation is that it's going to take longer for mortgage rates to come down. And a lot's going to depend on the incoming data. We just got December jobs data out. It showed that the economy added more jobs than many expected. The unemployment rate remains low at 3.7%. Those really strong job numbers are going to help put pressure on rates to stay higher for longer. So we may see a little bit of a give back and mortgage rates tick up a little bit before they eventually resume their downward trend, which we expect to see through the rest of 2024.
Danielle Hale. Danielle, thank you so much for the perspective. We certainly appreciate it. Thanks for joining me.